Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your technical analysis leader with no Wall Street hype for Friday, February 22nd, 2008. Well, today was a wild day, but primarily just wild in the last 30 minutes of the day as we saw a dramatic increase across the markets, or a dramatic rally, as we got some AMBAC news of a bailout here, and it came across the wires around 3:30. And the charts were so beautiful today because there were just ranges, there were just breakouts and breakdowns and fake breakouts and fake breakdowns across the board until that breakout. And I'm going to show you it here on the charts, and we're going to get into this. Now, the beauty of this, and let me get out my trend tool, is that there were fake outs left and right today. The volume early in the day was just dead. Early in the day, we actually had a little move up to the positive side, and you can see right here on the intraday, between 8 and 9 o'clock, you had an actual move higher right into that 200 intraday moving average. Now, once we got to that moving average, it was over. Basically, the market opened and the selling began. And the selling just continued all day, till about 1 o'clock in the afternoon. And you can see here, we sold off hard, rallied back. That's a nice bearish flag right there, pattern. You had another push down to the lows, and then we got into what was called a channel, a sideways channel that was key here. And I'm going to draw that in. You can see here trading to the sideways and to the downside in this sideways pattern. Now, the key here is that you had multiple instances where it looked like you were going to break out, and there were multiple instances where it looked like the market was going to break down. And the key here was that you can see on the upside, we touched the 20 moving average, but there was no close above this line, right? And again, you touched it here, but there was no close above. It reversed back down. Now, this is the beauty of the markets and why we follow these technical patterns, and you have to know the confirmation on moves. Confirmation is so key when you're looking for a breakdown or a breakout. Now, in many ways, the confirmation can get you to be a little late on a play, but it's a lot safer. In a bear market, you got to be ready for that. For instance, take a look at this candle. Look at it. So again, we're coming down here in the candle, sell, 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 hard sell, closes below. All the amateurs out there jump on the board on the stock here, or on the ES futures. And again, we're looking at the future E-mini contract March '08, and they go short. Well, because it closed below the line, right? Well, no, because you didn't get confirmation there, and it was a pure whipsaw action by the big players out there, and to shake amateurs out of the market and get amateurs to jump on short. The next candle, boom, 3:30 comes, you get the AMBAC bailout news, and off to the races we go. So it just shows you how beautiful this market is. Look at that shakeout right there that happened. You get the close below the low of the day, you make a new low of the day, everyone says, okay, we're breaking down, all the amateurs do. What happens? It reverses, never confirms. Did it take out that low right there? No, absolutely not. Never took out that low on that candle, that previous candle. You got a reversal right back up. Once that news came out, it was off to the races. Closed up on the day about 8 points here on the futures, 8.5 on the futures higher. The Dow closed up over 100 points, and the Nasdaq was up about 3.5 points. Now, you guys know we've been talking about some key things here. We had called last Monday, Tuesdays, and Wednesdays rally. We had the pullback Thursday, Friday, and this week, early in the week, we had also pulled back. We had a rally day, then we had a yesterday, which was a gap up and a reversal day, where we closed at the lows, and it wasn't looking pretty. And again today, it looked like we were going down, but there were key things in this market, and there were many key factors that were telling us across the board there was something up here. All right, sentiment was way too bearish. Something's going to come up. You just know. It always happens that way, folks. When sentiment becomes way too bearish, the put-call ratio was up above 1.2, which shows many more bears than bulls, or many more puts than calls. All right, that's one factor. You also had the VIX today, which was only up a little bit. When the Nasdaq was down 30 and the Dow was down a bunch, you had the VIX, which is a fear indicator, only up a little bit. That's a dead indicator as well. In addition, you had this nice channel forming here that was at some solid support on the daily chart as well as the intraday, and it was just looking to us, and we had actually talked about this early in the day and late in the day, that something could happen. Sure enough, off to the races it goes. You could have bought anything across the board, any technology, any financial, any housing stock, and made a nice bundle of money on this rally. And many people in the chat room did, so I encourage everyone to come into the chat room for these fun moves. Even in a market like this, where we were basically sitting on our hands just half asleep, you never know when things are going to change. And sure enough, come 3:30, people made almost enough to cover the whole week in trading, just in this one move in the last half hour of the day. So again, I strongly encourage, come join the intraday stock chat and come trade with us, trade alongside us, and join the chat and join your fellow traders. All right, let's go look at some daily chart patterns here now. The ES. Now the keys here on the ES. A couple things we've talked about lately, folks. Number one, remember the triangle. Talked about the triangle multiple days now. Now this is the other beauty of it, right? Yet today at the lows we would have closed outside that triangle. It would have been a breakdown. You would have then gone towards the February 7th lows, which yesterday we pointed out as being a key level if we had closed below that triangle. Well, guess what? That rally today saved it, pushed it right back up into that triangle, and we're still stuck in that range. We'll look for a possible continuation rally on Monday. As long as no other news comes out, you got to favor that there will be a lot of news and media coverage on this over the weekend, and it could get a nice gap up on Monday as long as there's no new news breaking of a bearish nature. All right, so keep that in mind. Should we close below that triangle right here on this chart, then you're looking for support at the February 7th low. If that breaks, then you're looking at the January lows here being tested. On the upside, should we break out of this triangle, then you're looking for this area, which will coincide with the 50 moving average and is getting closer and closer as the 50 declines here with the market being below. Let's take a look at the NASDAQ now, guys. NASDAQ, same situation on the daily. All right, you had that. Look at that. Look at the triangle. It was below for most of the day. They saved the NASDAQ by bringing it back to the positive side, closing it right on top of that triangle, the bottom area of that triangle. And we'll take a look at the upside, and the upside stays the same. Nothing's really changed. We're really dealing with the downside here. But nonetheless, on the downside, should we take that out to the downside, you will see that February 7th probably tested, and it was almost tested today. Got very, very close. Now, again, you guys know we've been talking about the second bounce in this market. This could be the start of it, but we need to see confirmation. Very, very key that we see confirmation here because we're still technically in a sideways trading pattern. All right, ever since this January level right here, you just draw a line straight over. Well, look where we are. Yeah, we were above a little bit. Yep, a little bit below, above, below. But ultimately, it's just coming all to a point right here, somewhere out here. So we have to see confirmation, but the bailout may be an indicator of too many bears in this market, and you might get some short covering continuation on Monday and maybe another push up to get this continuation pattern to the upside. So we'll continue to watch that. We'll take a look at the SPY here quickly as we get towards the end of the video today, and you can see the same things going on. These charts all look the same. They're all waiting on the same indicators, and we'll have to see. Notice the stochastics have come off here. Even though we've been trading in a sideways pattern, the stochastics have slowly dropped and now are flatlining here around the mid-level. All right, that leaves enough room for another push-up should it happen. So keep that as well. Notice also intraday, volume dead all day, especially in the intraday period of the middle of the day. And then look at the volume surge late in the day on that ABK news. And let me show you that ABK chart. All right, let's bring that up. Look at that move. All right, you got basically an $8.50 stock spiking all the way up to about almost $11. And you can see it topped out right here around $11 and then pulled back just a little bit into the close. After hours, it's trading up about a dime to 15 cents. Also, you can name any technology stock, but one thing I want to touch on is Goldman Sachs. This has been one of the key watch plays we've been watching in the chat room because on the daily, you have a situation here where we were watching this low. Okay, now look at this low. Let's draw that in. Now, this was a support level, right? And you had basically no close below, a close right on the line, a gap down, but a rally back above 174. And again, this level is 174 approximately. And then here we tested it again yesterday. Now today we sold off, and it looked like it was going to close below, which would be a major breakdown. All right, you close below on 174 on Goldman Sachs, you're going to 160. And that's what we talked about in the chat room. Well, guess what? Look at the intraday. It was below. It was actually in the 171s. And sure enough, good old bailout comes out, saves it, and look at the spike up you get. So they saved that stock as well, closing it back above that support line. These support lines were all across the market, folks. We were very close to breaking down, which would have sent us to February 7th lows and possibly to January lows. They saved it big time today. Big time save across the board. You can look at Baidu. Baidu and Google, I've noticed, were very strong today. All right. Google ended up about $4 here, $3.50. Baidu was positive. You can see here that it's been weaker lately, but today it showed a little more strength in the market. Now, one thing I want to point out on Baidu here is we're going to go to the 60-minute chart and just show you a little chart here. Look at this line here. Notice the taps on this breakout line. You have 1, 2, 3, 4, and we traded right along it, and this breakout now closed us above. So watch for possible more upside in Baidu as well. And the same goes with Google. Google and Baidu today were stronger than relative to the market. When the Nasdaq was down 30 to 35 points, Google was basically on the flat line most of the day. These may be reaching a near-term bottom. Also note here, you had a push down there, and then a rally back to that line, and then a higher low created and a sideways trading pattern. So that is a bullish sign as well. This is Baidu's 60-minute intraday chart. So keep that in mind. In any case, folks, you guys know the motto here at inthemoneystocks.com. The charts tell the truth. That's what it's all about here at inthemoneystocks.com. The charts tell the truth. Come join the swing trade alerts. We had some great moves on the swing trade alerts today. Come get in on those now. Come join the intraday stock chat, ETFs, options alerts. Check out inthemoneystocks.com, and we'll see you on Monday in the new video. Take care.